All right, good morning, everybody. It is Friday, April 30th, 2021, and we are going to run through the ETF trends today and talk a little bit about crypto, the dollar, fixed income markets at the end, because I think it's important. I think that there's a lot of people still caught up in narratives without any real reason to be doing so. If you've read the technical trading basics, I think it becomes pretty clear that the technical traders who try to give you fundamental advice after sitting in front of charts for 7 or 8 hours a day, you really should ask yourself, what time do they have to do fundamental analysis? Just my take on it. I knock my charts out in 5 to 10 hours a week and spend another 30 to 40 just reading, and then I write on top of that. So for somebody to tell me that they have a fundamental grasp just by cursory looking at things, it kind of makes me laugh. I know that most of these technical guys, they don't care about fundamentals. They'll just grab a narrative and put it out there, and other technical traders will jump on it because it supports their trades. So what we are going to do is take advantage of them because, frankly, they give us a lot of opportunities, and we haven't been taking all of them. We're going to try to work on that a little bit better. But what I'd like to see everybody do is really grasp the technical trading basics and how we're going to use some very simple relative strength index and a couple of other indicators give us chances to buy oversold ETFs so that we can catch a pivot, as well as ride out some of these trends that I think quite a few people have missed out on. So this will be a lot more explicit, which is what you asked for. So ETF Trends, I'll be updating this every Friday, probably get it out on Saturday morning. Sometimes it'll be Sunday morning, depending on what I have going on Saturday morning. And what we want to do is catch some trends. So right now, we have a couple that I think are interesting. These are not yet overbought on the weekly charts. I'll never buy anything that's overbought on the weekly charts, but they have some positive momentum without being overbought on the daily charts and are roughly fairly valued or only slightly overvalued. The reason why we would buy something that might be a little bit overvalued is because a lot of times the market drives things up to be a lot overvalued. Again, technical traders don't care about fundamentals. They'll just keep pushing the trend as long as they can. And in a highly liquid market, that's going to happen. So until the market becomes less liquid in some significant way, you're probably going to have at least some pockets of bullishness, even if the whole market starts to chop as a percentage of Fed buying, as a percentage of market cap starts to come down. So again, we use the stock screeners over at TradingView. This one is set for weekly charts, this one daily charts. And I just want to take a look at QQQ because it's the most important large cap index. If you took a look at some of the earnings that have come out so far, there is about $2.5 trillion on corporate balance sheets right now in the S&P 500. Funny thing is about 80% of that is in the top companies in the QQQ. Google, Apple, Facebook. Apple announced a $90 billion buyback this week. $90 billion. That is larger than the market cap of most of the companies on the S&P 500. So if Apple wanted to just go out and buy 2 or 3 or 4 or 5 S&P 500 companies, they could pretty easily with cash. They're choosing not to do that. They're buying back their own shares instead. And as Charlie Munger has said, you want to buy the cannibals. So while we'll talk about it on Monday, Apple is something that I'm really looking at again. Apple and Google, of course, are huge components of QQQ, which just keeps chugging along. As I pointed out last week, this is probably a more normal trend. This is not. You can see that this is starting to tilt over a little bit to match the slope of this. And the thing that I remind you about is that from here to here, there's $1 trillion of QE. From here to here, there's been about 4 trillion, and it goes up every month by a couple $100 billion. So when that couple $100 billion disappears, now we're going to have some deep thinking to do. Fed Chairman Powell said in his interview this week that at some point we would get zero QE again. Who knows when that will be? I don't think it'll be while Powell is the chairman. And I don't think he'll be chairman this time next year. He'll get replaced next January. So QQQ, when would I buy this? Well, it's outside of my buy zone. And this area in here, I would consider it a little bit overvalued. I think this is a lot overvalued by at least 10 to 20%. This area in here, I think, is probably around fair value. So if this would come back to around here, and it fought this area here, this fib level, served as resistance that it fought with. If it got back to that, probably have to take a look at around 300, 290 as a place to buy some QQQ. So this doesn't qualify for trend following for me. Why? It's just too overvalued. And it dropped down to here to a resistance level that may have become support. We won't know until we test it. It's very easy to get from here to here. So if we started to see this turnover, some of the oversold signals started to trigger or get close, and now we get to a point where you can argue that maybe it's not overvalued. Well, I think that level is probably down in here, but you have to give yourself some wiggle room because it can't be perfect. Say, okay, or right in here, I would get signals so that I could buy QQQ. Biotechnology index looks similar. QQQ has a lot of similar components. And again, I told you probably a year ago that the 2015-16 period is when I considered this bull market to have started. And it's not likely that we go back to the bottom of it. But it's not unlikely we get back to the top of this range. Be about here and here. So it won't be totally unlikely, a little bit of adjustment for extra money in the world, fewer shares, that the biotech index could get in here. I'd probably be a buyer of the biotech index at the top end here. In fact, I'm going to put that in because, again, I don't like to bet against the scientists. So if this came down here, I'd probably be willing to buy it. Everybody likes to talk about ARK. Again, pretty easy slope, QE driven. Last several months, QE has become less of a percentage of market cap. They haven't reduced QE because market cap went up, right? Keep setting new records. It's a smaller percentage of the market cap. And a lot of the stocks that ARK held, it really bid the prices up itself. They got to the point where they were buying shares that nobody else was buying. Not good for a price to go up. Nobody else is buying your shares. So ARK came down. It's been jitterbugging in here. And you can ask yourself a question, is with them having big Bitcoin and Tesla positions, where do I buy this? Tell you what, I guess I can move this up just a little bit, about 99 and 100. I don't think I'd buy this above 100. Still 121. When you consider the Tesla is bigger than the next 5 car companies combined by market cap, and companies like Ford outsell them 14 to 1, as do several other companies close to that range. These guys have 1.6, 1.7% of market share globally. You have to wonder, at what point does Tesla start getting priced as a car company? And what if That big holding in Bitcoin, which they partially traded out of, if you miss that, gets regulated, and they lose hundreds of billions of dollars in Bitcoin. This is a hugely dangerous looking chart, not just because of the uptrend, because it clearly has started to break down. So I could very easily see Tesla in the 400s, maybe the 300s, quite possibly into the 200s. And honestly, I don't think in the 100s again is out of the question. Why? It just becomes a function of sales at some point, correct? If you took a look at the motor trend and the Wired articles that I sent out this week, they had to do with Ford, what you realize is the first generation of the Mustang Mach-E is right there with the Model Y, which they've been working on for almost a decade. Do you not think that Volkswagen, BMW, and Toyota, and I test drove some Toyotas this week, aren't all going to be right there competing with Tesla the next several years? What edge does Tesla really have in the long term that they could potentially become, 20% or 30% of market share? I don't think they have any. They have first mover advantage. They don't really have any. So how does that impact a company like ARK, a fund like ARK? Well, it means, since this is 10% of ARK's holdings, and they also have Bitcoin, ARK has Bitcoin, ARK could get a double whammy. What if Tesla ultimately comes down by 70 or 80% from its peak? It's not an unusual thing to happen in stocks that do this. It's happened over and over again in history. If you're not aware of that, you should learn a little bit more market history. So I'd be very cautious with Tesla and ARK. ARK, remember, it's impacted by the people who hold the fund. Will panic and sell either Tesla shares or ARK shares. You can see a straight down elevator prop. ARK is very, very high risk right now. So again, not in my trends to follow. China, straight up, came down. I would rather own EMQQQ, because it basically does the same thing, actually a little bit better, with exposure to the rest of the world, and a lot fewer commie stocks. So I have some commie stocks in there. And ultimately, the Chinese don't want to see those get crushed. I just don't want a lot of exposure to China. So I'd rather have some Mercado Libre and some other emerging markets internet stocks. So just responding basically to a question I've had about this fund, this K-Web. And I don't know that I've removed it from the very short list yet, but now I have. It's no longer there. In fact, I don't want really anything to do with China, but I will leave the China ETF on there just as something to look at. So what do we want to get into? The VanEck gold miners and the iShares telecom are pretty interesting to me. So let's first take a look at something that could be a pivot trade, which is gold. People ask me about gold all the time. And I tell you the same thing over and over again. It's a trading vehicle, and you'll make more money in the gold miners than you will in gold. But what you can do here is, if you think that you're at an inflection point on a pivot, start buying 2 to 3 month call options. You don't hold them very long. At about 4 to 6 weeks out from expiration, you have to get rid of them, or the time value starts to erode your position. So if you're going to trade gold, you really have to trade it. And if you're not going to trade gold, then just go out and buy yourself some gold coins. This is not a buy and hold investment. This is a trading vehicle. If you want to actually own gold for the long term, go buy coins or little gold bars. So you can see this had the big rally, and it's been about a 8 or 9 month correction. This area right here doesn't match a fib level. Actually, it did before, but I erased it. You see how that was resistance, came off, went through, came back down and tested it, and now it wants to get back above. So this seems to be kind of the jitterbug zone. I think on down days, you could probably buy calls, the idea that this goes up. And there's a couple reasons that gold goes up. Uncertainty is the main one. It's not really inflation and deflation. Best asset that I told you about, going back 8 or 9 years now, for inflation is farmland. Forbes just talked about that. That's why I look at certain types of properties for my own investing, and why I'm going to probably start setting up some limited partnerships for real estate soon. This one, I think, you switch this over to the daily chart, what you see is it started to build a base. Right? Came down, tested, came down, wants to get up above there. I think you're probably going to see a rally back up to the highs. Does it finally break through? We'll see. I think the regulation of Bitcoin is going to be very positive for gold. Now, if you've taken a look at the gold miners and you saw Newmont's report this week, what you see is that Newmont is producing gold for around $1,000 an ounce globally. Some places it's 800, some places it's 1,200, but it's around $1,000 an ounce. And they are increasing their dividend, and they have the ability to not lose any production in the next decade. And in fact, over the next 20 years, it looks like they'll be able to keep producing at around $1,000 an ounce. So as the price of gold is firm or goes up, I would consider this pretty firm. Right? Held this area around 1,400. It's got as high as almost 2,000. And now it wants to hold this area that it broke through a while back. Gold miners are going to make a ton of money, even if the price of gold is choppy. And if it does go up, because there's regulation of Bitcoin, which has clearly been what's been draining money out of the gold markets, you probably see a pretty good rally in the gold stocks. And in fact, I still have about 12% of my portfolio in GDX. And then I also own Barrick Gold. I haven't bought Newmont because we haven't gotten that S&P 500 correction yet. And Newmont is a member of that index. So when the S&P 500 index comes down, you'll see selling of funds. That'll create selling across the board. But at some point, I'll probably buy Newmont. Just hasn't come back down into the low 50s, which is, 50-ish is where I want it. Another trend that I think you can follow, and I think this is probably mainly for retirees, would be the iShares US Telecom Fund, because it's been range bound for a really long time. You just look at this. But now, this range is narrowing. And when a range narrows, that usually means it's setting up for a breakout. And in fact, that's kind of what it looks like it's starting to do. Goes up just a few more dollars, the breakout is on. Right? It has to get through about 36. And then all of a sudden, these other targets, and these aren't for time. These are just targets. I mean, they probably happen far off to the right, but I don't want to put those far out there. So when you buy these, you don't have to use call options or anything. You can just get into a good fund that you can ride to a price target. So if you're a dividend investor and you want the 2.5% dividend, you can buy this on a down day, still in our buy zone, and then just ride it up here to 40 and then probably close to 50. And why do I think that's going to happen for the telecom companies? One, their CapEx is going to start coming down in the next few years as they finish off the 5G expansion. The new technology that allows them to do rural areas using satellites versus putting up more towers is cheaper, more efficient. And as more people get onto 5G, right, all of our fees are going to go up. There'll be a 5G fee. There just will. That's how they do it. And then you have companies like Comcast, AT&T that are getting into entertainment as well. So if you're a dividend investor and you want something with a good trend with not a lot of downside, U.S. telecom during a down week is probably a good one to get into. Now, the Spider Communications ETF has Google and Facebook in it. So 2 huge cash-rich companies in addition to these telecoms. And if you're not going to get much dividend here, you're only going to get like 0.5%. But if you want higher growth, compare XLC, right? Now, will it always outperform like that? No, this is part of the unusual QQQ chart and all the QE money. But Google and Facebook are sitting on mountains of cash, so they're not highly vulnerable like some of the other companies that aren't cash rich. So even though this will come down, I would expect XLC will outperform the iShares fund over time. And Spider was smart. Spider peeled off a couple of companies that used to be considered tech and threw them in communications. So I do like XLC, but I don't like it here. Other pivots, pretty much all the clean energies, and we talked about that extensively last week. Big run up, and it seems to be nearing the completion of its correction. When you take a look at the underlying companies, it seems to make sense. Sun Power's come down, Sunrun. A lot of these stocks have come down to almost reasonable valuations. Down in here, I don't even know that you could argue that it was overvalued anymore. In here, again, this is the might be overvalued zone. This is the probably not overvalued zone, probably fair value. This is probably undervalued. So where does the market take this? I don't know. But this is a favorite fund of the millennials. So I think maybe if you don't own PBW, you don't have enough clean energy exposure, given what's coming down the road with the Stealth Green New Deal, as Wall Street Journal, put the infrastructure plan. There's price scale in here, scale in here, scale in here if it gets there. If there's a big correction, back up the truck. iClean isn't quite there yet. And for the aggressive among you, if you want to just focus on solar, you could. I'd have a hard time buying this much above the low 70s. And I think getting into the 60s is not unlikely, especially if the price of oil comes down this fall like I expect. Between now and November, I expect the market to remain choppy. Capital gains increase is going to get passed. Some people are going to sell, and other people are going to talk about people selling, right? They'll drive the narrative. As I've shown you before, over and over again, a lot of big investors, even though the institutions and the mutual funds are very heavily invested because they have to chase performance, your family offices and individual wealthy, they've been selling into strength since late last summer. And they were selling into that strength before the pandemic too. They basically just bought on the pandemic crash and then been selling their profits. So this one could have one more leg down that's pretty big. And again, especially tied to oil. The reason why oil is going to come down is if you take a look at India, they had almost 400,000 new cases of COVID last week. Well, maybe it might have been yesterday. I'd have to double check, but it's a lot. So there is a huge COVID crisis around the world right now, still raging on. We're lucky that over half of us now have been vaccinated. So if half of us remaining gets vaccinated and other people get the disease here in America, hopefully it doesn't mutate because of that. We're going to be in pretty good shape. But how does the world economy do if India, which is what percentage of the people on the planet is at? 11, 12%? What if their economy is in the tank, which seems to be going on? The other thing to consider with oil is that there's no shortage of it. They can manipulate the price all they want, but remember, the countries in the Middle East need the revenue. The U.S. oil companies are in big trouble because the day is coming And the Middle East can't hold back on production. They can't withstand these low revenues much longer. You'll see that Saudi Arabia is now selling off another portion of Saudi Aramco. We're way past the beginning of the end of oil. And these fits, when the price of oil drops, are good times to pick up clean energy because those will drop at the same time. Yeah, somebody mentioned a lot of reinfections of people in India. And it has to do with variations and mutations. It's very important in the United States that you yell at the people who aren't getting vaccinated, because that's what causes more mutations. We need to knock it out fast. Just like we were on the verge of bending the curve down and then we backed off. We can't back off on these vaccinations. I mean, we already pretty much know we're going to need a booster every year or two, but the worse the mutations get, you know, the possibility of having a relapse is not unlikely. So let's talk about something that's not ready for a pivot just yet. I think it has one more leg down. That's TLT. At some point this year, I think we're going to buy TLT. I don't know when it is. It's getting closer. And it has something to do with this whole cryptocurrency equation. Gold is in there. Whether or not we can really have a sustained recovery, if inflation really is transitory, and I think that it is, right? We're just comparing against a year ago right now. Once we have the higher comps for inflation, we'll be back down to 2% or 1% inflation again next year or the year after. Let me ask you a question. If something's been true for 40 years, and we know what the reason it is that it's happening, what has to happen for that thing to no longer occur? For 40 years, we've had falling interest rates and low inflation. What two things would have to happen for there to be inflation, for interest rates to really go up materially? Well, the first thing is that interest rates would have to get all the way to zero, which they've almost done a couple times. The short-term rate is there. And interest rates are a reaction to inflation as well. So as inflation remained tepid for many, many years, decades, interest rates just kept coming down. We pushed interest rates way up in 1981, Volcker, we pushed down inflation. The interest rates have gradually come down for the last 40 years because inflation became less and less of a problem, less and less on people's mind, policymakers' mind. And in those 40 years, you should ask yourself, why did inflation never really come back? And the answer is demographics. There is no other consideration. There is no other answer. It's demographics. Are there some complications with debt and technology? Sure. The main reason that we haven't had inflation is the aging demographics and that the population curve is flattening out. So instead of bending up more each year, it's bending up less each year. It gets to that point where the curve is starting to turn flat. So what would drive inflation in reality? We'd have to see aging demographics start to move towards younger populations and growing populations. And it's the rate of change. You need increasingly growing populations. So 1 year the population grew 3%, and the next year was 3.1, then 3.3, and then 3.8. You need that curve not just be heading up in a linear fashion, bending up as well. That's not happening anymore. It hasn't for over a decade. So with counter-cyclical policy, we can print money and print money, which is what we're doing essentially. Again, it's not technically printing money, but it's basically printing money. So the counter-cyclical policy is there to fight deflation. Deflation is driven by demographics and amplified by debt and technology. Been through this a whole bunch of times. You can't change demographics quickly. In fact, it really won't change in any of our lifetimes. At some point, everything will flatten out for a generation, probably about 3 or 4 generations out. So closer to the end of the century than the beginning. And then maybe inflation is a real big thing, for our grandkids, because we've saddled them with enormous amounts of debt, and the aging of the population slows down. Again, rates of change. So if the economy is only going to have a rebound and then go back to 2 to 3% growth, it would stand to reason that interest rates come down again whenever the next recession is, or the next shock. You can see this bounce around for several years till we have to deal with the retirement system, which I thought was going to be closer to 2030, but newer studies are starting to say 2026. In the meantime, I know that it's not popular to talk about John Maynard Keynes, but if you're an economist and you actually studied economics, what you realize is that he was mostly right about most things. He made a ton of money as an investor on his theories. What's driving Bitcoin, among the things that are driving Bitcoin, is the Austrian economics idea that everybody is subject to a business cycle that's similar to how a household functions. You know what I'm going to say about that, right? What word are we going to use? Bullshit. Macro economies do not operate like our household budgets. There's no calendar that says when they really have to pay anything off. Why? Because you can always issue new debt or collect more taxes. So you have all these crypto anarchists and wannabe Austrian economist types, and then all the hucksters that are pushing Bitcoin. And I'll put Elon Musk in that group. He bought it, hyped it up, and just a couple months later sold a whole bunch of it. What does that tell you? So I sent out a tweet earlier today because I was looking at all the Bitcoin and whatnot in the doggy coin. Some people call it Dogecoin. It's really doggy coin, right? I'm not saying. I'm just saying. This whole crypto thing feels a little 1999. Got some pretty popular people here who jumped on that. And this guy, Seth Golden, if you want to do day trading, I'd say follow him. I'm not going to do day trading, but if you want to do day trading, he'd be my recommendation over anybody at Seeking Alpha. He said a little like 1999. Bitcoin. Does this look anything like a currency should look? Even a commodity should look. Ethereum. How many of you have been buying your pizza with Ethereum? Doggy coin. Come on. Here's doggy coin compared to Bitcoin. Bitcoin's the brown one. Doggy coin, Bitcoin. Doggy coin, Bitcoin. How does that make any sense to you? I'm just going to say this. If any of you think that Bitcoin is actually going to be a currency, you are naive and undereducated on the subject. Janet Yellen and the other central banks and the central banks are going to crush Bitcoin. I can't tell you when, but it's closer every day. And I believe that you're going to see Bitcoin drop between 70 and 90%. Remember, I told you to buy it last summer when it was under 10,000 for that hot minute. I knew the hype cycle, another hype cycle was coming. I'm telling you right now, if you bought any of those Bitcoins at 10, or 15, or 20, or 25, or 30, you ought to be taking your profits. It's not going to a million, and if it does, it'll just do what GameStop did, drop straight down. Have another rebound rally, and GameStop's going to end up at 40 again before it settles into a new business model, which I talked about 3 years ago would eventually happen if they survived. And I think they'll survive. The only good way to trade cryptocurrency, somebody asked if you can buy puts on this stuff, is in the futures market, which means you have to understand how to trade with margin in futures. If you don't, if that doesn't just roll off your tongue, like, hey, I know how to do that, don't do it. Because you can buy the gold and gold stocks or TLT instead. It's always better to be long something than short something. Why? If you're long, the calendar's on your side. If you're short, the calendar works against you. So if you can find something that's going to go up when this comes down, right? Just find what is the mirror image of these. It is pretty clear where gold was going for years since it pivoted, right? Had the long basing cycle after coming down, based, started to rise again. It's only come down during the Bitcoin hyper cycle. This is a breather, not a trend. You should be buying this stuff. And I'm telling you, if you're an options trader and you're good at it and you understand how to pull the plug when something starts turning against you, right? And you're looking at your holdings 3 to 5 times every day, then you can trade calls on this stuff. But if you just want to hold it for a few months, you know it's going to go up, buy it on the dips, let it rise for you for 3 or 4 or 5 or 6 months, or however long it takes to get to its targets. So GDX, if you don't own it, or you don't own somewhere between 10 and 20%, I mean, it should be that big a part of your portfolio. Gold stocks, I believe, should be between 10 and 20% of your portfolio. Again, I have about 12% in GDX, and then I have a good 4% position in Barrick Gold, and I like this. Then I own a couple of other things that are fairly well correlated. So at some point, safety trade will come back on because the dollar either gets too strong, the dollar gets too weak. Still in the Goldilocks zone. Look what I told you, we're still higher since Biden's election on the dollar, even though everybody wants to talk about it coming down. Tested this level here. I haven't changed this chart in a long time. I mean, you can go back years and see that I basically had the same chart. This level here, it tested. When it tested that, people were like, wow, you got lucky on that one. Yeah, right, because there's not clear signals that that was a battle zone price. Just came back to the battle zone. Checked it out. It's coming back again. When the crypto dollar comes out, dollar is going to strengthen. Doggy coin, Ethereum, Bitcoin are all going to get their asses kicked because they're not going to be currency. The banking system, the central banks, the governments want control, and they will have it because they write the laws. They control commerce. You think an online casino, if they're told, hey, you can have a license to operate in the United States, but A, you have to report taxes over a certain level, and you can't take cryptocurrency unless it's from a sovereign government. Do you think that the online casino says, screw you, we're just going to operate illegally? Or they say, yeah, give us that license, and we'll follow your rules. Way too late in the game to get into these cryptos anymore. Now it's just gambling. We talked about buying it in here. This is when we talked about buying it for several months, right? We'll look at the videos from July and August. I mentioned Bitcoin no fewer than 5 or 6 times, week after week. Too late. Sell it. Sell this rally. Because you know why? Because all these guys that bought in here and they talked up the narrative, they're already selling. Wait for MicroStrategy's earnings report. Tesla already sold a couple $100 million dollars worth. All right, so there was one other ETF I just wanted to show you. Indonesia is interesting to me. Malaysia is interesting to me. I haven't visited this one in a while. It's a nice consolidating base here. After the hit to oil that's coming, it'll come down in here, probably be a buy. You're betting on the country getting better, so it's not a big stake, but it could go very high. Take a look at, it's a symbol for the India ETF. IND. Yeah, so you could see the India ETF come way down in here, right? That looks Pretty easy. Pretty easy to see that, right? Low 30s. Do they have a repeat of this? I don't know. Not money in the world. For sure to the low to middle 30s. It could come back down in here in the 20s. There is a small cap India ETF. So this one comes down in here. I think it'd be interesting. All right. Somebody says there's more buying than selling in Bitcoin. Oh yeah, well duh. Bitcoin is manipulated. 80% of the Bitcoin are in 2% of the accounts. You're a sucker if you believe in Bitcoin. Doesn't mean that you didn't make a good trade. This should be telling you something. It should be telling you something that Elon Musk is selling shares, selling some, right? He used you. The more I learn about Elon Musk, and God bless him for pushing the world in the right direction, he has a very unique type of ethics. That's all I'll say about it. All right, let's call it a day. I'll get this edited down and up tomorrow morning. Have a good weekend.